Right, hello everyone. Zaheer Anwari here on behalf of the Dynamic Trader. Thank you to FX Street for having me once again. Can I just get a quick mic check? And actually, yeah, I think that should be it. Right, can I get a quick mic check and screen check? Oh, actually, administrator, could you send me over the link to the chat box, please? As I cannot see any of the messages. I don't know if anyone can hear me, Maurizio or Adinda. Brilliant. Okay. Bear with me 1 second. Okay. Fantastic. Okay, fantastic. Right, Zaheer is advertising. I can't. It says advertised to be here now. Okay, fantastic. Okay, guys, right. I think we are good to go. So you guys should be able to see me. Hi, welcome. Thank you, B. Thank you to everyone else who's in the chat box, and thank you to everyone who's watching this on YouTube. And if you're watching this on recording as well on the YouTube channel, welcome to you as well. Okay, interesting. A few days in the market. Of course, we've got NFP out tomorrow. We've got the US elections on the what is it, the 7th? Yeah, Monday, 7th, I believe. Excuse me. So an interesting few days ahead. Now, as a trader, as a technical trader, I tend to stay well out of the market and don't get involved in all of the noise and the intraday volatility that is appearing. It's not something that I want to get caught up in. I simply allow the markets to do what they need to do. Over the coming days, I take a step back. Most of the time, my computer is totally off. I'm out doing whatever I need to do. I'm a full-time trader, so I don't work. I don't have another 9 to 5. So my computer's closed. I have my trades in play. I've got long-term positions in play. Many of them are thousands of pips in profit. And now I'm simply waiting for the markets to settle down and for normal price action to resume. And this is really an approach that I encourage all private traders to adopt. I know you're encouraged to go down to a lower time frame and day trade and scalp for a few pips or whatever the process may be, but it's a very inconsistent approach. And if anything, the only people that really profit from that style of trading are the brokers, because whether you win or lose, brokers profit from every single trade that you take. So you will, of course, be encouraged to day trade, because the more you trade, the more the brokers make. Whereas what you really want to be doing is trading less and making a lot more. And the way to do that is to be first of all, understand your market conditions. Be on the right side of the market. So if it's in a bullish trend, you want to be long. If it's in a bearish trend, you want to be short. If it's in a consolidating market, you want to be standing aside. Once you are in a winning trend, you then want to hold and compound. So as opposed to being in and out, you simply want to take a few trades and hold those positions for as long as possible. It's far less work, no stress, and far, far, far more profitable. And over the long run, it's an empowerment of your time and your money. Okay. Good question. What do you do with your stops? What do you do with your stops during NFP? I leave them where they are. If you go back, if you back test, and if you look at NFP over the last 5-6 years, go check every month that NFP has come out. Look at how little impact it has over the long-term trend. It has very little impact. So for me, I simply leave my stops where they are and I allow the market to do what they do. And then usually Monday, I'm back to normal. But with the elections on Monday, it'll probably be Tuesday or Wednesday where I go back to normal activity. Okay, so just a quick direction to the following website. So tdtpro.trade. If you want to take your trading to the next stage in terms of taking it from a shorter time frame to a longer time frame, if you're in employment, you're finding it difficult to adapt trading around what you do, this is for you. If you're inconsistent with your returns, profit loss, this is for you. If you're finding trading very stressful, this is for you. If you're a business owner, a parent, whatever it may be, if you are a private trader of sorts, this is the best way forward for you. So please have a look at the following website. This will direct you to a whole month of training at £99 for the month. Now, I'm also going to be handing out this ebook. I've had tons of requests, literally on a daily basis, for the following ebook. So if you haven't got this ebook, please email me on Zaheer, my first name, Zaheer, at tdtpro.com. I will be putting that in the chat box at the end, but Zaheer at tdtpro, that's Tommy Delta Tommy Pro, pro.com. And you can see it's a very extensive ebook, starting with your trading bias all the way through to a trading plan. Now, one thing that I note whenever I have conversations with traders who are finding it very difficult to see consistency is that they don't have an edge, they don't have a bias, and they don't understand why they're having a lot of losers. If you don't understand why you're having losses, if you can't explain why you're having losses, more losses than profit, then you've got to take a step back. You've got to stop executing trades altogether and understand what market conditions you're in and how to then trade built on that. And this will help you. This ebook will bring consistency to your trading. Okay, it's a good starting point. The following website is then an environment where you can then put that ebook into practice. Okay, there's a lot that goes into the strategies, community support, software, watch lists, live webinars, the whole shebang. Okay, right, let's get on to the charts. I'm assuming that you guys can still see the charts. I know that if the charts don't appear at any point, then I'm sure the administrator will give me a call to let me know. Okay, so on the top left corner, extensive watch list. So Aussie dollar, US dollar at the top, all the way down to the South African rand, Japanese yen at the bottom. Extensive watch list. What we then want to do is narrow down the watch list to the currencies that are worth looking at. Don't panic with the fact that I have such a big watch list, because only 2 or 3 of these currencies are worth trading at any moment in time. And when I say any moment in time, I'm talking about weeks and months. I'm not talking about for a few minutes or a few days. I'm talking about weeks and months. Now, everyone seems to understand what it means to be on the right side of the trend, and I trade trends. There's just, people seem to be well informed, but very few people seem to have knowledge. And there's a fundamental difference between being informed, i.e. understanding terms, trend trading, bullish, bearish, stop losses, whatever you may call it. Everyone seems to have an understanding or seems to be well informed with terms of trading. When it comes to actually trading, executing trades and being knowledgeable, very, very few people understand that. So we want to get away from being informed to being knowledgeable. Okay, and that really comes with understanding what you're doing and not rushing to load a broker account with money and start executing trades. So one of the first things that you want to understand is you want to have everything on your watch list, and not just foreign exchange, but stocks and commodities. Because money, the market makers, they move from market to market. They're not always in foreign exchange. Don't believe what you're told that foreign exchange is the most profitable market 365 days of the year. It isn't. Understand where the money is, understand where the market makers are, and then go to that market. If foreign exchange is going sideways, where's the money gone? It can't just magically disappear. The money has moved to somewhere. So as a trader, you want to get away from thinking in terms of I am an FX trader. Get away from thinking in terms of FX. What you want to be is a trader. You want to take advantage of the most profitable environments, and that may be in stocks and that may be in commodities. Guys, the reality is this. People who don't have money trade foreign exchange. People who have money trade stocks. And what do I mean by that? If you go online, you can pretty much open up any foreign exchange account with 50 quid. Try opening a stocks account with 50 quid and see how far you will get. Okay, so you want to start changing your mindset and you want to start thinking like a big dog. You may not be in a position to actually start executing trades in stocks, which is fine. But that doesn't mean that you should just trade, you should just execute trades in foreign exchange for that reason. If you can't execute trades in stocks, but stocks is more profitable, understand what's happening in stocks and stand aside from foreign exchange, and then figure out how you're going to get the money. And the easiest way, guys, is to get a job, have money, have a salary coming through. There's no shortcut. You can't turn £100 into £10,000 in 6 months through day trading. That's not going to happen. And I hear it all the time. People come to me and I give them a reality check of how much money is needed to get starting in trading. And they say to me, well, I've only got £1,000 in trading. I'm going to day trade until I've made £5,000 to £10,000, and then I'm going to come back to you. And I never hear back from them because they're still banging their head against the wall. Okay, so you've got to be realistic in terms of the investment needed and the way forward when it comes to trading. Have a big watch list. Then narrow your watch list down to the currencies that are in trend. So what we need to start doing is understanding how to develop a bias. So what are we going to do in this webinar? We're going to understand how to develop a bias. We're going to understand what kind of market conditions we're in. We're going to understand whether we are looking for long opportunities, short opportunities, or we're standing aside. We're then going to go through the currencies that I'm looking at and looking for breakout opportunities. A lot of these currencies are in breathers or consolidations. I'm waiting for breakouts. So we're going to look through the currencies and pinpoint exactly where I'm looking for these currencies to break out. And then we're going to look at how far these currencies can possibly trend to. And this is crucial because once you're in a trade, you don't want to have a risk to reward of 1-to-1, because you may have one winning trade. The next losing trade is going to outdo all of that hard work. You'll have winners, losers, winners, losers. You don't get anywhere. So what you want is you don't want a fixed risk to reward. You want a risk to reward where your risk is capped and your losses are capped, but your profit is uncapped. So your risk to reward should really be 1 to infinity. Remember the expression, guys, the trend is your friend. You want to keep on going in the direction of the trend until it ends. So keep your profits uncapped. How do we do that? I'm going to show you. Okay, so let's start with the Aussie dollar, US dollar. Now, I know there's several people who've already seen this, but guys, what does this tell you about trading? Good trading is repetitive. Good trading has the same simple techniques that are used again and again and again. It should almost, I don't like to say that trading should be boring, but it should be repetitive. It should be simple. Trading is very much like a puzzle. You put all the pieces of the puzzle together, you get a complete picture of what trading's about. That's the beauty of trading. So, but George Soros, excuse me, was it George Soros or Jim Rogers? I can't remember who it was. One of them said that if you're having fun trading, you're most probably not making any money. So you don't want to be excited by sitting in front of the computer. The excitement should come from the lifestyle that it gives you. Okay, so some of the techniques that I'm going to show you are the same techniques I use week in, week out. Nothing different here. Okay, so the first technique that we want to use, the first simple technique that we want to use are these pink lines, which are the high. You can see the previous high, the previous low. I've unchecked the previous close for now. I just want to keep it simple. So there's the previous high, the previous low of the previous calendar year. So 2015, this is the highest point and the lowest point of 2015. If current price action is inside of these pink lines, I stand aside because price doesn't have a bias to it. What I want to see is price either above the high, giving price a bullish bias, or below the low, giving price a bearish bias. Now, with that understanding, look how quickly I can go through this watch list and decide whether a currency is worth trading or not. Okay, Aussie dollar, Canadian dollar. It has now just broken outside of the pink line. If I just open up the monthly chart. So you can see that for several months, we were inside the pink lines. Now, as of last month and this month, it is now displaying a bullish bias. So this is looking interesting. Keep an eye out on the Aussie dollar, Canadian dollar. It's starting to have a bullish bias. If you look at the Aussie dollar, Swiss franc, it is still inside the pink lines. If we look at the Aussie dollar, New Zealand dollar, it is still inside the pink lines. So by being able to quickly, just by using these pink lines, I can go through a whole watch list of 50 or 60 currencies and go yes, no, yes, no, yes, no, and shortlist 50 or 60 to 10. And then those 10 or 15, I can take it down further to 2 or 3 that are worth trading. Okay, and that's all trading is about. Knowing how to manage a watch list is fundamental. Okay, so which currencies are currently on my watch list just by using these techniques? Well, let's have a look at the euro pound. The euro pound is above the pink line, so we have a bullish bias. The pound currencies all have a bias to them. If you look at the pound dollar, has a bearish bias. Pound Aussie dollar, a bearish bias. You can see it's below the pink lines. Pound Canadian dollar, a bearish bias. Okay, so all the pound currencies, pound Japanese yen, very much has a bearish bias, and the pound New Zealand dollar also has a bearish bias. If you look at some of the yen currencies, the dollar yen, it's also trading below the pink line, so we have a bearish bias. So all the pound currencies and all the yen currencies are looking very, very interesting as they're trading outside of the pink lines. We've also got some of the Kiwi currencies starting to develop a bias. So the New Zealand dollar, Canadian dollar. We can see, if I just compress the monthly chart, you can see that it's now creating all-time highs and it's heading towards the figure 1. If it clears the figure 1, then this would potentially be a currency worth trading. But you can see how this is now heading towards the upside. It's now got a bullish bias as it's trading above the pink lines. So that is one very simple technique that I use to decide whether something is on my watch list where I may potentially trade it or not. Okay, so as a reminder, these represent the high and the low of the previous calendar year. Now, something to note, guys, is that my software automatically updates these levels for me. So when 2017 starts, these will change to the high and the low of 2016. Okay, so the software does a lot of work for me. Good software is very, very important. You want to get away from using free software, guys. It's a start if you are new to trading, but as you develop and as you progress, you want to start looking at good software tools. You don't want to stay with an amateur platform. You certainly don't want to stay with a broker platform. There's no functionality to it. Okay. All right. Now let's just go to the euro dollar. There's been a lot of talk on the euro dollar recently, and you can see the euro dollar. Here is where I traded it. Very profitable bear trend where I extracted 15,500 pips in 9 months. And you can see since then, it's just going sideways. It's in a consolidation. What I'm looking for now is a breakout. As the trend is bearish, I want to break out to the downside. Okay, now let's move on. The next point I want to bring up is these levels. Now, these are major levels of support and resistance. When you speak to a lot of traders, they don't have logic to the way they use support and resistance. They don't have logic to the way they use maybe trend lines or Fibonacci's. They simply take a guess and they click on 2 points, or they draw because they feel this is a good line. There's a lot of feeling to the way people do their technical analysis. You want to have very strict rules. Now, when I started trading, I didn't have the time and I didn't have the inclination. I'm very lazy to try and figure this all out, which is why I found a good mentor to teach me how to trade. And mentoring is essential. If you are clever enough to figure this out on your own, by all means, then you're on the right path. Me personally, I'm a fairly intelligent guy, but I'm very lazy and I didn't have the time to figure this all out. I didn't have the time. I was a photographer. I was working 15, 16 hours a day. I just did not have the time to be doing this, which is why I sought out mentoring, and which is why I am in the position I am today, because I was able to acquire this knowledge from some very, very good sources. Okay, so you want to have rules, and you then want to stick to those rules. Remove the subjectivity. Don't base your trading on feelings and emotions. Okay, you want to be mechanical, you want to be robotic, and you want to have no subjectivity. So what is the logic behind these major levels of support and resistance? And the answer is a high bar or a low bar with a minimum of 10 bars on either side. So these are pivot points that have a minimum of 10 bars on either side. Now, this is all explained in the ebook. So after this webinar, please email me and I'll send this out to you. But this is all explained in the ebook. And you can see, guys, that if you look to the right-hand side and if you look to the scale, these levels are usually associated to a round number. So if you look at the highest point, 1.6. If you look at these two lines here, 1.5. If you look at this level here, 1.4. If you look at this whole support level, 1.2. If you look at where price is consolidating, 1.1. So significant levels, round numbers, the distance between one round number and the next round number is 1,000 pips. And I'll come back to this. Towards the end of the webinar. But round numbers, keep in mind, guys, round numbers are significant. Whether it's stocks, commodities, or currencies, round numbers are significant. What people should start understanding is that price has some natural features to it. One of those natural features is that price likes to move towards round numbers. Think about it, guys. If you're jogging, you're not going to stop at 12.3 kilometers. When you pass 12 kilometers, you want to get to 13 kilometers. If you pass 13, you go to 14 and then 15. You're not going to stop at 14.4 and say, oh, I'm done. It's the same thing with price. Price rarely gets to some random level and just stops. It wants to get to round numbers, and that's where trends may reverse. That's where price may consolidate. But round numbers are very good levels, target levels when price is in the trend. And this goes back to my final point, which I was going to cover, which is how can you let your winning trades run? And the answer is to use round numbers and trading stop losses. Okay, now the weekly and the daily, we need to develop a bias on there as well. How do we know whether we have a bullish bias or a bearish bias? And the answer is the 200 moving average and the 50 moving average on the weekly, and the 200 moving average and the 50 moving average on the daily. The 200 moving average is significant because it's also used by institutions. The 200 moving average gives you a bias. So if price is above the 200 moving average, we have a bullish bias. If price is below, we have a bearish bias. Now, also, you want to see the 50 moving average acting as a resistance level in a bear trend and a support level in a bull trend. So what do we want to see? We want to see price trading above both moving averages on the weekly, above both moving averages on the daily in a bull trend, and above the pink lines in a bull trend. Or we want to see price trading below both moving averages on the weekly, below both moving averages on the daily, and below the pink lines on the monthly. That is how you develop an edge. This is where, when you speak to a lot of traders, they don't have an edge. They seem to rave on about their profits when they have winning days, but they quickly disappear on losing days. And when you go further and pick their brain on their winning trades, you can tell it's just a lot of gamble, it's a lot of luck and hope. There's not really any logic, or there's not really a bias to it. You want to be able to break down your edge. An edge is crucial. If you don't have an edge, if you can't explain an edge, guys, you don't have one. And if you don't have an edge, you'll get eaten by someone who does. I've now given you elements of my edge. Price trading outside of the pink lines, above the moving averages in a bull trend, below the moving averages in a bear trend. So let's have a look at the euro pound as an example. Euro pound trading above the pink line, so it has a bullish bias. Above both moving averages on the weekly, above both moving averages on the daily, and look at how the 50 is acting as a support level. If we go to the pound dollar, below the pink line, so we have a bearish bias on the monthly, below both moving averages on the weekly, giving price a bearish bias, below both moving averages on the daily, giving price a bearish bias. If we look at something like the Aussie dollar, okay, you can see that we're inside the pink lines, so for that reason, not something I want to trade. But below the 200 on the weekly, above the 200 on the daily, above the 50, above the 50. So it's very inconclusive. There is no real edge on the Aussie dollar, US dollar. I see a lot of trades being taken on the Aussie dollar, US dollar, but not one that I want to be looking to trade. I see a lot of trades being taken on the Euro Aussie dollar, and you can see that the Euro Aussie dollar is still inside the pink lines. If you remember when we last visited it a couple of weeks back, there was good weakness taking place. For those who were on the webinar a couple of weeks back, good weakness taking place. But since then, there's been a reversal. Why has there been a reversal? Because if we look at the monthly chart, we can see there's multiple support levels based on pivots, and because price is within consolidation. So a good chart should scream at you. A good chart should say, hey, trade me. A bad chart will say, hey, don't trade me. And this is how you should be able to decipher them. Okay, so let's start with the pound dollar. Let's have a look at that now. Now that we've understood market conditions, what we then want to understand is how can we enter into this? When we've got an overall bullish or an overall bearish bias, how do we enter? Well, below the pink lines, so we have a bearish bias on the monthly. Below the 200 and below the 50, so we're bearish on the weekly. If I open up the daily, below the 200, below the 50, so we're bearish on the daily. If you look at what's currently happening, it's nothing more than a bit of consolidation. This may be a significant move to people who are risking large amounts of money and day trading, but this is nothing more than a little bit of a breather in the overall direction of the trend. I am short since 1.4. So when price broke just below 1.4, I've got short positions running, which are all in good profit. So if you look at the move to the downside, we've got 2, 4, 6, 8, 10, 12, 14, 16, 18, let's say 2,000 pips approximately from 1.4 to 1.2. Price covered 2,000 pips. This move to the upside in comparison is only 400 pips. So this is insignificant in the overall direction of the trend. This is where patience comes in. Okay, this is where patience comes in. I've got my trading stop losses in play. If this gets any deeper, then I'll look to exit for my trade. But from now, this is fine. We just need to hold and be patient with the market and allow the market to do what it needs to do. When am I looking to enter further positions? A break and a close below this pivot support. This is not an environment where you want to be taking long positions, because tomorrow NFP may come out, or we may have a big bearish engulfing candle. If we have a big bearish engulfing candle, you're going to be stopped out for an unnecessary loss. You're trading against the market. You want to trade in the direction of the market. What I'm looking for now is a break and a close below this pivot support. And this is when I'll look to add further positions. So I'll compound further. And where would I like to see price go towards? Well, if I compress the chart, we're at 1.2. If price clears that level, then I want it to go towards 1.1 and then the figure 1. So I'm looking at a further 2,000 pips. That will mean price will have traveled from 1.4 to 1. That's 1,000 pips that price has traveled since I entered my short positions. 4,000 pips. Through compounding, 4,000 pips can easily equate to anywhere between 10 to 15 to 20,000 pips with significant compound growth in terms of percentage. Significant. Okay, all the other currencies are in a very similar setup. When I say all the other currencies, I mean the pound currencies. Bearish. You can see that price is currently around 1.6. Also a very good idea of how little the pullback is in terms of the overall direction of the trend. So we can see that the trend has been in place since, let's say, about 2.2 round number, and now currently at 1.6. So what we're looking at, 1, 2, 3, 4, 5, 6,000 pips. Small move in terms of the overall direction of the bear trend. So don't let what's happened this week allow the emotions to come in if you're short on this. Bearish, below the 200, below the 50, daily. Again, very, very similar to the pound dollar. We want to see a break and a close below this support level. A break and a close will mean we can compound further. After every move, market consolidates. We're now waiting for the next round of trend. Patience, guys. So a break and a close below here, and I'll add further positions. Okay, let's have a look at the pound Japanese yen. I've skipped the pound Canadian dollar. I've skipped the pound Swiss franc because I'm not in those. I'm short on the pound yen. Again, very good move to the downside. Currently around the 130 round number level. Below the 50, below the 200. We've also had a cross of moving averages, death cross, and on the daily time frame, below the daily 200, below the daily 50. Again, nothing more than a consolidation around the 130 round number level. If I get my horizontal line, a break and a close below this level will suggest a continuation. Again, patience, and allow the market to dictate what to do. At the moment, it's very much guesswork. Should I be going long? Should I be going short? If breakouts happen, that is a very good indication of a trend continuation. So allow the breakout to happen first and then go in that direction. Pound New Zealand dollar. You can see creating new lows in terms of the overall history. Price is creating all-time lows. below the pink lines, below the moving averages on the weekly, below the moving averages on the daily. Again, if I get my horizontal level, you can see that we've got space. We've got about 500 pips towards the low of this pivot. Now let's have a look at what's happened so far. We had a breakout, actually. We had a breakout yesterday. Not a very convincing breakout, but we had a breakout, and the market has now reversed back up. Big bullish bar earlier today, but the bears are now coming in and pushing price back down. So it'll be interesting to see how it ends the day, and also how this will impact the markets tomorrow, what kind of movement we'll have. Okay, let's have a quick look at the dollar yen. Some interesting moves taking place on the dollar yen, but as you guys can see, it's finding support at the 100 level. So for 1, 2, 3, 4, 5, 6 months now, price hasn't broken through 100. The trend is bearish, the bias is bearish, but we need a break and a close below 100. So we really want to see price clear this support level here. When price clears this support level, then we could see weakness towards the 80 round number and this major pivot support level here, which is the low of 2012. Below the moving averages on the weekly, below the 200 moving average on the daily. So we have a bearish bias, but we can see that the 50 is acting as a support level at the moment. So we need to see price clear this level once again. Now remember, the bigger the consolidation, the bigger the breakout. This has been consolidating since June, July. So what we're looking at, we're looking at 1, 2, 3, 4, let's say 4.5, 5 months. The bigger the consolidation, the bigger the breakout. A break and a close below here will suggest a continuation of the trend, and this is when we can start looking for short positions. Okay, New Zealand dollar, Canadian dollar. Let's have a quick look at that. We're above the pink lines, above the moving averages on the weekly, above the moving averages on the daily. However, let me show you on the monthly time frame. However, we're in very close proximity to the figure 100, so about 200 pips away towards the figure 100. Until it clears 100, until it clears 1.00, until it clears the figure 1, this is acting as a major resistance level. So until it clears the figure 1, I won't be taking any long positions. This is something I'm watching for, but I won't be taking any long positions until it clears the figure 1. In addition, if I compress the daily chart, you can see that it's quite messy. Pullbacks tend to be very deep. It's not a very smooth trending instrument. So I'll be very aware of how the market is, how the price is trending in terms of me placing an entry. It is looking quite interesting from this point here. We can see how it's moving quite nicely, but it is prone to these sudden pullbacks before a continuation, another pullback before a continuation. So you've got to be aware of these pullbacks. What does this mean? What this means is this currency may be more suited to a pullback strategy rather than a breakout strategy. So you've got to understand the nature of the currency and then look at what do you have in your arsenal. Do you have a good pullback strategy? Maybe this is more suited. Okay, you've got to have a good pullback strategy. You've got to have a good breakout strategy. You want to focus on breakouts as your primary strategy, and you then want to add pullbacks as a secondary strategy as and when you need it. Okay, because think about it, guys, breakouts happening across all markets, whether it's a fast moving trend or a slow moving trend, you'll always get breakouts. But in a slow moving trend, you'll have pullbacks. In a fast moving trend, you won't have pullbacks. So focus on breakouts, but add pullbacks as and when necessary. Okay, let me just go to the questions. Let me see. Okay, 4 questions. New traders want instant gratification. How do you calculate stop loss and how do you trail? Yeah, it's a good question, B. I don't particularly talk about stops and trailing stop losses. If you want to know more about that, then please get involved in the training. Check out this website and you'll get all the information you need regarding my stop losses and trailing stop losses. I have to be loyal to the people who have already joined the community, so I cannot be sharing that kind of information in these free webinars. So if you want to know more, then please join the training. Okay, I think that is everything. Are there any currencies that people would like me to go through? I've gone through all the currencies. Let's have a quick look at the euro pound. I didn't go into the euro pound in much detail, but the euro pound, you can see it has a bullish bias, but look how it's reacting to this major pivot resistance. You can see that price tried to break through it. It's been pushed back down, and the round number 0.9. So you can see that there's a whole resistance zone prices contend with. So it's stuck between resistance and support. What we need is a breakout, and as the trend is bullish, we favor a breakout to the upside. A break and a close above this level will give us an entry, and we then like to see price move towards the figure 1, and then 1.1, 1.2, etc. Look at the round numbers. Above the moving averages on the weekly, above the moving averages on the daily, you can see trend, nothing more than a bit of consolidation. If I just get this level tool here, you can see that price is currently contending with this support zone, support level. Price tried to break through it, and price has been pushed back up by the bull so far. So it'll be interesting to see whether this is broken tomorrow or whether we have a continuation to the upside. Once this pivot high is cleared, this is when we could potentially start looking for long opportunities. Okay, so that is the euro pound. South African rand. Okay, let's have a look at the South African rand. Okay, South African rand. Well, if you look for yourself, South African rand is inside the pink lines, was in a bullish trend. It's now inside the pink line, so not a very good looking chart at all. Inside the moving averages, below the moving averages, so very inconclusive. I don't trade exotics. I know the Turkish lira actually looks far more interesting. I'm not one to trade exotics, but you can see for yourself, Turkish lira above the pink line, so it's starting to have a bullish bias, above the moving averages on the weekly, above the moving averages on the daily. If you look at it though, a lot of whipsaw action, very messy, very choppy, even when in a trend. So this is the last time it was in a trend. Trended quite neatly to the upside and quite uniform in terms of pullback, but the pullbacks are too deep for my liking. If you compare it to a stock that I'm currently long on, Nvidia, you can see for yourself, look at the pullbacks compared to South African rand. I've been long on this since $40. This is now around $70. This is a much better looking trend compared to the South African rand. So as already mentioned, you want to have you want to keep an eye out on your watch list. You want to be able to balance a watch list, a portfolio. You want to be able to manage it, know what should be on there, what shouldn't be on there. Swedish krona, another currency I've traded in the past during this period here. Very, very good profits for several months. After every move, the market consolidates. Now, guys, here's another example. What we're waiting for is a breakout, and the breakout has happened. Bullish breakout to the upside in the direction of the bullish trend prior to the consolidation. What we're now looking for is this to continue towards 10 and 11 and 12. There is a resistance level here that price has to contend with. So if it clears this resistance, that's positive. If it clears 10, then that's also positive. But this is looking interesting, guys. So rather than the South African rand, you've got this as a potential opportunity. I'm not saying trade it, but one to keep an eye out on. Okay, I think perhaps it's too exotic, but what about the US dollar COP, the Colombian peso? I don't think I've even looked at that, Mauricio, but thank you. Yeah, let's have a look at that. Where are we? I don't even know if eSignal has it. Oh, it does. There you go. Okay, well, there you go, Mauricio. Colombian peso. It's inside the pink lines. Bullish before that. So, yeah, strong bullish run to the upside from around 1,800 to 3,400. Correction to around 2,800. You can see now it's around the 3,000 round number level. But until it breaks out of this consolidation, this is not something that I'd be looking to trade. And the reality is I don't trade exotics. Why? They don't trend very well, very choppy. Some of them are susceptible to political unrest. Things like the Israeli shekel, the Russian ruble, Turkish lira. They can be affected by political reasons and whipsawed all over the place. So there are reasons for that I don't like to trade exotics. In addition, not a lot of profit can be made from certain exotics using certain broker accounts. So you can move from A to B on the pound dollar, and you can move on from A to B on, let's say, for example, the South African rand. The profit that you make on the pound dollar would be far greater than on the South African rand. So, you know, it's not really worth trading trading exotics when you have other majors and their crosses available to you. The only exotic that I really like to trade is the Singapore dollar. So if you look at the Singapore dollar, guys, look how well it's trended in history. Very profitable periods. At the moment, consolidation inside the pink line, so nothing of interest. But when it does break out and trend, it trends very, very well. It's not a very fast moving currency. It's not very, directional momentum is slow, but it trends very, very well. So it's a good currency to have to balance out your portfolio. Okay, I think question from YouTube. Okay, great. What's your thoughts on Kiwi? What's your thoughts on Kiwi and Aussie? Okay, is that against the US dollar, or is that the Aussie dollar against the New Zealand dollar? Well, let's have a look at all of them. So Aussie dollar, US dollar, inside the pink lines, not one. I've already looked at it. It's inside the pink lines. I'm not interested in trading it. Aussie dollar, New Zealand dollar, long-term consolidation. The last time I traded the Aussie dollar, New Zealand dollar was this period here. 2013, 2014, good bearish trend to the downside. Since then, it's been very choppy. Inside the pink lines, I'm not interested in trading this. And if we look at the New Zealand dollar also inside the pink lines. So I don't like the look of the Aussie dollar, US dollar. I don't like the look of the New Zealand dollar, US dollar, and I don't like the look of the Aussie dollar, New Zealand dollar. I do like the look of the pound, New Zealand dollar, which is a currency I'm looking for a short position on. I've already been short on the pound Aussie dollar. I've been short on the pound Aussie dollar since around 1.8. It's now at 1.6. So my short positions have been running for around 2,000 pips. I've got multiple short positions. So the pound Aussie, the pound Kiwi, yes. Aussie dollar, US dollar, New Zealand dollar, US dollar, Aussie dollar, New Zealand dollar, no. Question from YouTube, Jay. What software you're using? Yeah, the software I'm using is the software I'm using is eSignal. Okay, it's eSignal. It's not a free software, guys. This is a subscribed software. So a lot of people use MetaTrader because it's free. A lot of people use their software provided by their broker because it's free. People don't want to invest into trading, and they're hoping to get a lot of good results using free software. It's not going to work, guys. By having good software, you can develop your own tools. I've got over £100,000 worth of tools available to me. These aren't tools that come from eSignal. These are tools that we've developed. I've got trend filters. I've got an inbuilt money management system. I've got stop losses displayed on the screen. I've got signals for entry points, whether it's a breakout or a pullback. I've got let me give you an example. Don't worry about the names of pages. Those are just names of pages that I've given. But let's have a look at this particular page. So if you look at the pound Aussie dollar, if you look, I don't have the standard candlestick. So if you look at the pound Aussie dollar, you've got the standard red and green candlesticks. Whereas on this page, I don't have the standard red and green candlesticks. I've got my trend filter, and that removes all the inconsistency in a trend, because a trend doesn't move in a straight line. But if you look at this whole area, it's red. Okay, this is just an example of one trend filter that I've got. I've got multiple trend filters, all for different strategies. If you want access to these software tools, guys, I give them to our community members. Okay, so, and that's around £100,000 worth of software. We give them to our community members. What you have to pay for is the licensing, because we've got developers in America who develop our software. There's a licensing involved. So you have to cover the licensing, but we give you the software. What would you rather have? Go away and try and develop £100,000 worth of tools, or be given them and pay for the licensing? This is where time comes in. This is where your focus comes in. What is more important, getting this, making money, or trying to figure this out? I know when I started trading, I wanted to make more money and get out of the system. I had a boss who I didn't particularly like, and I was working hours that were horrendous. So I wanted out of the system. So my focus was leveraging my salary far greater returns than the bank was giving me. So I wanted tools and systems and strategies that worked, and I wanted a support from a mentor that was unwavering. and that's why I am where I am. So you've got to weigh up your choices. What is important to you? Down your priorities and make the right choices. Okay, I think that's all the questions. Okay, guys, so let me just direct you to a few pages. As always, I'm going to put them in the chat box. Okay, so if you want to check out this website, this is for the training. It's £99 plus VAT if you're in the EU, that's tax, or it's £99 if you're outside the EU. You can search for me on Facebook, guys. Add me on Facebook if you want to chat to me on Facebook. We've got a Facebook page as well. I'll just put that in the chat box. Okay, so just search for the Dynamic Trader. I'm also on LinkedIn. Okay, and most importantly, guys, if you want the ebook, then please email me, which is zaheer@tdtpro.com. Okay, zaheer@tdtpro.com. If you email me, I will then get the ebook over to you. Okay, that's me for this week. NFP out again. As a reminder, NFP out tomorrow. Stay out of the market. Be smart. It's a day where brokers increase their spreads. It's a day where brokers profit heavily, where most private traders will lose money. The ones that succeed will most likely lose money the following week, the following NFP. Just be smart. Take an extended weekend. Monday, we got the US elections. My computer will also be closed. As a trader, as a full-time trader, I've got 4 days of weekend. Friday, Saturday, Sunday, Monday. That's my weekend. Okay, my computer is going to remain closed. Okay. See you all. Have a lovely end to the week, and I will see you at my usual time, which is Wednesday. I know it was changed for this week, but Wednesday next week is my usual time. Okay. Thanks, administrator. See you all. Have a wonderful end to the week. Take care. Bye-bye.